Hey, what's going on everybody? Thanks for joining me today. If you're new here, I'd appreciate it if you subscribe to my channel and smash that like button. And if you are already a subscriber, I appreciate you very much. Thanks for joining me again. And also leave a comment below on your thoughts, questions, anything that you might have for me. And if you might need help on something, just leave me a comment below. All right, so today I'm talking about what to do if you haven't filed your taxes in several years. And I'll break this down into different sections to help make it easier for you to understand. So the IRS has what's called a 6-year statute of limitations, or a 6-year requirement for filing taxes. That means that if you haven't filed in 10 years, since 2010, because right now it's 2020, that means the oldest 4 years of tax returns you won't have to file. That means you only have to file the previous 6 years. If you haven't filed in like 3 years, then go ahead and get those filed and get those going. Get with a professional or somebody that can help you there. But if it's been longer than that, if it's been 6 years or more, then don't file all of them yet, okay? Don't do anything yet. Get with a professional to help you, either a CPA or an EA or a tax attorney, somebody that maybe specializes in tax resolution. They can definitely help you there. So the reason that you should seek professional help on this is because sometimes there's some weird things going on with your account. Sometimes there's weird things going on with each individual year on your account. So a tax professional can really help clarify what those things are. And also I'll set some realistic expectations here. So first, I need to talk about tax refunds. Tax refunds have a 3-year statute of limitations on them. That means you only have 3 years to file your taxes and get your refunds. If you were due a refund back in 2015, again, right now it's 2020, so that's 5 years ago. If you prepare your taxes and you see that you're due a refund in 2015, guess what? You're not going to get that refund because it's past the 3-year statute of limitations. Sometimes if you owe taxes in previous years and then you file your tax this year and you're due a refund in this year, then they're going to apply that refund to your previous year's tax liability instead of giving you the refunds. If that's the case for your 2015 year, if you file your taxes and you're due a refund, but you owe other taxes, they're not going to apply that refund to those other taxes as well, okay? So you lose out big time for not filing your taxes. One might say you threw away your shots there. It's really important to keep up on taxes, especially if you are expecting refunds. Don't blow it off like, oh, I'm not gonna get a penalty for not filing my taxes. After 3 years, you threw away your shot, you're not gonna get your refund anymore, you're not gonna be able to get a credit on your account anymore, and then it's just lost money, okay? That's the IRS keeping your money there. So that's one reason to file on time. And if you haven't filed in several years, let's say that you have that 2015 tax return and you are expecting a refund and you're like, oh, if I'm expecting a refund, I shouldn't file anyway because I'm not going to get anything back anyway. But I would suggest that you still file, because if you were to get like a penalty in the future year or something, the IRS wants to see all required returns filed before they give you a penalty waiver. And I did a video on this a week ago or so. Go back to my channel and check it out on the IRS penalty abatement. But you need to have all your tax returns filed, all your required returns filed in order to get that penalty waived. So that's another important thing to consider. So sometimes when you haven't filed in years, some people never get any notices, they never get anything from the IRS, and they're just, they're basically left alone. While other people will get notices demanding that they owe money and requesting payments, and there's all these penalties and interest charged onto it. So what happens there if you get a notice from the IRS demanding money and you haven't filed taxes? What happens there is likely the IRS filed a substitute tax return for you. And this is a situation that's not good. And I'll explain that later, okay? So remember that, substitute tax return. If you haven't filed in years, what are the steps that you should take? What we would do for our clients is we would get a power of attorney from you that allows us to talk to the IRS on your behalf, and then we would call them. We would do what's called a compliance check, which, when we talk to the IRS agent, they just run through your accounts, basically, and let us know what years haven't been filed, what years have been filed, if there's been substitute returns filed, if there's been examinations done on any of the years, all those things. They give us a compliance check so that we have like a ground to stand on and know what to do next. Because, you know, oftentimes situations are a lot more complicated than just, I haven't filed in years. Because if the IRS has been doing stuff to your account, then we have to do and react accordingly and plan accordingly. We may also find out what years the IRS don't require you to file, or what years the IRS does require you to file. That gives us more information on like, you know, specific years to prepare for, and it could save you money. You know, if you're not required to file certain years, then we won't bother, because then we would just be charging you money to file the return when you don't need to. So that's another important thing to find out. And after we find out that information, we request what's called transcripts. So transcripts basically are like a raw data dump of all your income information that's been reported to the IRS, or sometimes deductions information, like IRA deductions or mortgage interest, that kind of thing. If they are reported on a tax form, like a W-2 or 1099, a 1098, or like a 5498, those kinds of forms, if they're reported on there, that means they're reported to the IRS. So the transcript helps, because usually if you haven't filed in 10 years, 5 years, whatever it is, you might not have those forms anymore to file your taxes. So having the transcripts will give us kind of like a good outline on what we should report to the IRS on your tax return. One problem here is that the transcripts only have federal information. They won't have any state information. So this is important. If you have W-2s with tax withheld, you know, we can only see the federal amounts of taxes withheld. If you want to get your state amounts, we have to contact the state, and that's a whole separate thing. And, you know, I'm in Colorado. I have had no problems getting that information from the state of Colorado. If I call in, if I have a power of attorney for you, that shouldn't be an issue. I don't really know what it's like in other states. That's who you would want to contact to get that information. Okay, so once you get the transcripts, we have to do a little more questioning, and we have to think a little bit more, because only certain things are reported to the IRS. Okay, so if you own a business, let's say you own like a retail candy shop. No, this is not a reference to 50 Cent. But let's say you own a retail candy shop, and you know, you've had it for 5 years and you've been making money here for 5 years. That kind of stuff might not get reported to the IRS, you know, like especially if it's mostly people paying cash for it. If you take credit card, then that likely would get reported to the IRS. But if people are mostly paying cash, that's not getting reported to the IRS. And so you have to go back and think about your true income here and what's been reported to the IRS and what hasn't. So self-employment income can be something that's not usually reported to the IRS. However, if you're an independent contractor and you receive a 1099, that means that income was reported to the IRS. Another thing that might not be reported to the IRS is rental income. Now, you know, if you're renting out to like just a couple or something, if you have a condo that you're renting to a couple, it's likely that couple will not file a 1099 to the IRS to report the rental payments that they paid you. So that's another thing where, you know, you have to track that, or at least dig that information up through your bank accounts, statements, or whatever it is, to find out how much rental income you made. Also, things like dependents and marital status will not be reported to the IRS, as well as business expenses, rental expenses, and cost basis of your fixed assets. Obviously, your business expenses are not reported to the IRS because that's just something that you incur either through your checking account or through purchasing on your credit card. Those are things that you have to track and report to the IRS yourself, which brings me back to the substitute tax return that the IRS files for you. So if you're an independent contractor and the IRS receives a 1099 that reports all the income you made, and they file a substitute tax return, well, that tax return is going to be way off because they don't have any expense information on that contractor income. So they're going to have all of this income, no expenses or deductions to offset it. So they're obviously going to think that you owe more taxes than you actually do, which is why it's really important to file your taxes, to report all your income and all your expenses, and also to report your cost basis of any fixed assets that you sell. So that's pretty much the steps that we run through with our clients if they haven't filed in years. Is we kind of talk to them to see what's going on. Then we get their power of attorney. We call the IRS to do a compliance check and to get transcripts for their account, okay? And then we chat with them to see if they have self-employed income, and if they do, then we gotta try to dig up those expenses and report those expenses to the IRS on their tax return as well. And if they sold a bunch of assets, then we gotta dig up the cost basis of those assets so they pay less capital gains than if they didn't report a cost basis, okay? And from there, we prepare the returns and we file them. And after we file them, we just do another compliance check to see and make sure that everything's current now and everything's all good. All right, so that's all I got for today. Thanks for joining me. If you have any questions about this, again, leave a comment below, and definitely subscribe to my channel if you haven't done so already. And please smash that like button if you enjoy the content of this video. And also do me a favor and share this video with people that you think might find it helpful. I'd really appreciate that. All right, so take care for now and stay safe.
I'm in the mood for a switch up. I hit the function, hit the rose till I hiccup. I hit the stage and leave with money that's a sticker. She picture perfect, so I told him